And earnings just out from Home Depot. Big Dow component, big retailer that have been waiting to hear from. Get this, the home improvement retailer earning $4.09 a share for the first quarter.
Wow.
That's compared to the consensus estimate of just $3.68. Revenue also looks like a big beat, too. Revenue coming in at $38.9 billion, with analysts looking for just $36.7 billion. Check this out right now. That stock is already up by about 1.8%. Comp store sales were higher, too. They were up by 2.2%, and analysts had actually been looking for a 3% drop in comp sales. So this is much better than had been anticipated. They were going up against some really strong numbers from the year ago period. So people had pretty tight expectations in terms of what to think. Joining us right now with his instant reaction on this is Brian Nagel. He's senior analyst at Oppenheimer. And Brian, I want to tell you a few more things on this. The company's also raising their 2022 guidance, looking for total sales growth and comp store sales growth of about 3%, operating margins of about 15.4%, and diluted earnings per share growth expected to be in the mid-single digits. This is a lot better than most investors were anticipating. How about you?
Good morning, Becky. No, look, this is again, we're just digging through these numbers right now, but look, this is a very, very solid, very, very strong, solid report from Home Depot. I mean, like you said, I think the real key here is that sales growth. A lot of concern out there in the market about home improvement spending, consumer spending broadly, but here we have literally one of the world's largest retailers, showing better than expected sales, and just the tone of the release, given what they said in Q1 and then the guidance, suggests that here's a company that very much expects this strength to persist through 22.
The CEO, Ted Decker, gave a little bit of color around this. He said the solid performance in the quarter is even more impressive because we were comparing against last year's historic growth, and they faced a slower start to spring this year. Just says that this is a direct reflection of the associates' continued ability to effectively navigate what he calls a challenging and dynamic environment. Does that mean, look, they're going to give us some guidance that's better than it had been expected? They must be seeing something that they think is more than just a fleeting moment.
Well, look, I mean, it's, so Ted's comments, I think, will be very well received by the markets. As I've been talking to our clients, in anticipation of this Home Depot report, a lot of the market was, so to say, bracing for a potentially softer print. Like you just mentioned on Ted's comments with the weather, I mean, it was well documented. We had a slower start to spring. And then, like I said, I noticed a minute ago, any type of pressures related to housing. But look, we're just not seeing it. And I think, it's a great testament to Home Depot. But I think it also shows this underlying strength in this broader home improvement category.
Right now, Home Depot shares are up by 3.8%. I don't know if you can see the tick by tick. I'd like to take a look at Lowe's shares, too, guys, if you can call that up from the back, because obviously, this is helping them out, too, up by about 2.7%. Is this a case where, based on these comments, you think that this will be helpful for Lowe's as well, that this is just a sign of the strength of the consumer?
Definitely. I mean, look, Lowe's, and as I say in your show quite a bit, I mean, Lowe's today is a much better run company than Lowe's was, say, a few years ago. New CEO, Marvin Ellison. I really think now, when I think of the operations of Lowe's and Home Depot, they're two very well-run companies out there. Lowe's is no longer the laggard. So when I hear positive comments like this from Home Depot, that my initial assumption is that bodes quite well for Lowe's. And of course, we'll hear from them tomorrow morning. But look, I mean, I think the narrative coming out of this will be, and again, all these concerns in the market about consumer spending and particularly home improvement spending, this is going to put those to rest for a while, because what we're seeing here is real strength. People are still spending on their homes despite, what these perceived headwinds.